Maybe just quick review. Last quarter, it was down, like I mentioned, 0.4%.
Yeah.
New happenings, we begin to hear things like profit warnings from the likes of UBA, FCMB. Eventually, we did see some loss-making performances in some of these companies, but pretty disappointing. I mean, that's what many analysts were saying, particularly from the banks.
Yeah, absolutely, quite disappointing from the banks. Even though I'll try to put a bit more of a positive spin to the stories we're seeing. Interestingly, I think what we've seen from the banks is the central bank, and probably with AMCON in tow, have become more stringent in the way loans are praised. And I think that's very good for the banking sector. I would almost equate it to a slight extent to the capital stress test that we see in Europe, where the central bank goes in and says, if things turn around for the worst, will this bank still continue to survive and demand maybe additional capital in that regard? And I think that played a significant role in the sort of numbers that we saw from the banks for 2011. And I think that has actually laid the foundation for a stronger 2012, because if you've written off and made 100% provision for those non-performing loans,
the worst is over.
The worst seems to be over. And what we now need to focus our attention is what is the quality of the loans that the banks have today. And in the event that we see probably is a further worsening in economic conditions, not just in Nigeria but globally, how do those loans stand the test of time? And I think that's what we should focus our attention on. Interestingly, I think the market obviously likes to look at the rear view mirror, but I think investors in the future will start to realize that, look, what is more important when you are evaluating a company's prospects is the future cash flows and the future prospects of the business, because that's really what you're buying, not the historicals.
Absolutely, and we should get some indication of what to expect from the banks. This week, Diamond Bank should get things rolling. First quarter results should be out. What are your broad expectations and how the market is likely to react?
I think we're going to see very good numbers from the banking space. Even though January was a very slow month because of the fuel prices and all of those challenges. But I think that 2011 has also helped a lot of the banks from the cost side of the business. We've seen cost to income ratios decline, significantly, almost across board. Even like banks like UBA have started to, clamp down on their costs.
Tighten,
and that is very good for the sector, because if the top line continues to grow and businesses, the banks are able to cut down on their and tighten their belts, and then it means that investors would benefit in the long term. And that's what we'll be looking out for from the banks like Diamond Bank and all the guys reporting soon, is to say that have you been able to manage your costs and how much business have you been able to grow?
But what will be the impact on the market, though? Do you think it will be enough to get this market on a
absolutely no. My story in the last 3 years has always been that what needs to happen for the Nigerian market to see some form of sustained recovery has to be the winning of the confidence of the retail investors. We don't consider those guys as big-term players, but they're price takers, and that's very important. The institutional market has a pricing framework within which they work. I would buy UBA at a PE of X. But if you are looking at the retail investors, they look more at, can I make money in the short to medium term?
So we need that speculative
flow into the market for us to see sustained growth. And the only way we're going to get that speculative growth is monetary policy must be in tune with the growth expectations of the government, and fiscal policy as well must also balance. Then we must see increased corporate governance from the corporates as well, because you've seen a significant damage in corporate governance over the last 5 years.
How would you assess that? Do you think that has improved?
I would say we've seen a lot more in terms of improvement. I think more than ever before, shareholders are becoming more involved in questioning management, and you see a lot of there's a general talk, for example, today, especially from the banks, of people saying we need to interact more with our shareholders. We need to provide more information to shareholders. And with the influx of the institutional, foreign institutional, and even the local institutional, the pension funds, the asset managers, those guys are asking a lot more questions from management and demanding a lot more answers. And that is good for the market, because it means that the transparency that we're looking for the market would naturally happen even without regulatory fiat.
But you don't think the retail people have bought it yet? The changes we've
seen? No, I don't think the retail people have bought it. There are also things that have happened in the market, and if you see what has happened on the inflationary front, the retail investors or people who would ordinarily would be retail investors are still grappling with their own issues as well. They've got higher interest rates on loans that are historical. They've got a high inflation environment, even though that seems to be crimping a bit. But in the low inflation we're seeing is more a reduction in disposable income than prices actually falling or prices rising at a slower pace. So I think all of those things need to come together. Right. For us to see a recovery in that part of the market.
Two more quick points I think that may have a bearing on the market. Of course, the direction of interest rates and how the MPC will react to inflationary expectations. And then, of course, there's the Naira. I mean, that is something that particularly foreign investors keep a very close eye on. What are your thoughts on how that is going to play out in this quarter?
Two things. I've always said that the Naira, for me, is an extraneous factor. The central bank focuses on the currency. So sometimes to the detriment of the rest of the economy. And it's almost the same thing with this obsession with a low interest rate environment. Low interest rate environment, a low inflationary environment is good if you have sustainable and a widespread growth. In a country whereby there's no power, there's so many things that need to be fixed for us to get to the point where we become obsessed with inflation targeting and currency targeting. I'm saying to you that let's fix the fundamentals of the economy. If we've got, a strong manufacturing base, if we've got world-class infrastructure, then the arguments around growth, around the currency, around inflation becomes more structured. And in that way, we can then deliver numbers to people. And then the small-time investors start to say that, okay, there's a long-term plan, and I can invest in that long-term plan.
Yeah, but if you were to wrap it up for me in 20 seconds, what are your broad expectations for those 2 points, the Naira and interest rates?
I think the Naira will continue to remain stable. The central bank will continue to do that. Interest rate environment, I hope they start to see that the tightening in 2011 is beginning to slow down economic activity, and we should start seeing a loosening before the end of the year.